I'm about to give you a huge piece of advice that can save you thousands of rands. So if you are new to New Zealand, please just give me 5 minutes because this can drastically affect your family. Now, South Africans in general, we are a very mindful bunch when it comes to life insurance, but they know that they need to protect their family, especially if the primary applicant for the visa to New Zealand dies or gets seriously sick. So when they arrive to New Zealand, it's one of the top priority things that many people want to sort out. However, there were 3 very big mistakes that many South Africans make when it comes to their life and sickness insurance in New Zealand. Now, it's not entirely their fault, of course, they just don't know what they don't know. Now, many people turn to their bank for life insurance because when they open their bank account, the clerk they asked if they need life insurance. And of course you do, you're new to the country. But this is the first biggest mistake because the banks are some of the most expensive premiums out there. But because they, the clients, they don't know any better, the price the bank gives them actually sounds pretty cheap. But only because they're used to paying South African prices for life insurance. Now, I'm going to show you actual live examples using the BNZ, but not to pick on the BNZ, of course. I've just found that 80% of the clients that approach me who have a bank policy, they seem to be with the BNZ. So let me actually show you a live example why I say the banks are so expensive. Check this out. So I've logged onto the BNZ's website. You can see the URL over there. This is the premium calculator for life insurance. I'm going to put in $1 million worth of life insurance as a male. I'm born the 24th of the 12th, 1978, and I'm a non-smoker, and calculate. Going down the bottom, you can see the premium here is indicative, but it is $86.12 per month. Now, for, let's just say that's 860 rands per month for about 10 million rands worth of cover. Now, to most people, that sounds pretty great. It's not. Okay, let's just switch over to where my life insurance actually is, and that is with Partners Life. It's there for very good reason, because I can do things there for myself and for my clients you can't do anywhere else. You can see all of the same details is inside of their calculator, and for a straight $1 million worth of life insurance lump sum, it's actually quite a bit cheaper. It's gone from 86 down to 72 a month. Now, if you're anything like me, you don't want to spend heaps of money on premiums, so that is a saving right there. But this is going to lead me now into the big mistake number 2 that clients make out there when they do their life insurance, is that they rely on lump sum levels of life insurance to pay out income. Because remember, when you arrive to New Zealand, most people, they don't have very big debts yet. Debts like a mortgage for a house, right? So what they're trying to do is to make sure that if one of them dies, especially without residency, that the income is going to continue as long as possible. So there is a better way. Don't rely on a big lump sum life insurance. What you can do is pull that right back to, say, $250,000 worth of life insurance. You can use that to do certain things, such as pay for your funeral, flight to, let me type that right, flight to South Africa if you had to, pay off some little debts, upgrade the car, things like this. That makes sense, right? That's where this money can go. But then what does the family live on? Because even if they had to go back to South Africa, because the residency is not approved yet and the main applicant dies, you might need to make sure that you've made provision that they have some income. So let me give you $6,000 per month, tax-free, that pays out for 15 years, right? That is not $86 a month. That is about $2 more than what the bank is. But what is the cover worth? This together, this is worth around $1.8 million to your family, and it costs the same, virtually the same in premium. Let me show you why. If you go to the premium calculator, Partners Life is the only insurance company out there that guarantees that they will grow what your family gets by a minimum 5% a year. So if you start off at $6,000 a month, by the way, when it comes to tax, there is no taxes on this. It's tax-free. So it doesn't stay at $6,000 a month over time. The next year it grows by 5%. The year after that it grows again. And you'll notice every year it grows at a compounding rate. So by the time you get to year number 15, you've had $1.8 million worth of payout, including the $250 that you got up front. Now that is a deal. Absolute bargain. The same price as the bank, we have virtually doubled the life insurance you can get. Now, if you wanted to compare apples with apples as well, let's just say we do $3,000 a month instead. Over 15 years, that's worth $1 million, the same as what the bank was at $86 a month. So if you pull that back to $3,000, the policy now becomes worth together just over $1 million, but that is not going to be $86 a month. That is $58 a month. Now if you take 86, you minus 58, that is the saving. That's about a $27 saving. That is about 30% cheaper. 30% is a very big deal. I say again, the banks are expensive, but the banks do not allow you to do this. It's just simply not an option. Now, I think the point's made there, but there's one more thing you need to be aware of when it comes to the banks, because I see this a lot. I'm going to do a bit of a blank screen here and show you some things. When it comes to your policy, in the mail, you're going to get a document. It's going to spell out who the life insured is, who the owner is, and then details to the policy here. What I see very, very often is that the life insured, let's just say it's me, Paul de Klerk, is also the policy owner, Paul de Klerk. Now, if you have a policy with the bank, I suggest you hit pause very quickly and go break that little guy out and just have a look and make sure that you are also not simply the only life insured, because the one who gets paid the money is the one who has died. The owner gets the money. What you need to make sure is that your family is the one that survives you, owns the policy with you, so that they get the money. If you do not do this, if you are the sole owner of your policy, your wife or your husband will be waiting a very, very long time. They would need to approach the banks, all right, in order to claim this money. The bank is going to say, no, no, no. You're going to have to get some letters of administration from the high courts and get a lawyer to do it. Thousands of extra dollars, many months waiting for the life insurance. And in the meantime, they are stuck with bills. There are your three big mistakes. Number one, going to the bank. They are expensive. Number two, relying on some big upfront lump sum life insurance, because for most people that come here, they don't have big debts. You can save yourself a big pot of cash. It's big money in premiums to save your money there. And then number three, make sure that the right person owns the policy in the first place, because if you did need to claim it, you know, it's very likely if you're the only policy owner on there that your family is not getting this money. All right. Now, hit me up on the website for more information if you want it. I've got lots of great videos on there. Take a look. It's under the life insurance section. I'm here all the time. Flick me an email if you need some help. Happy to help you guys. God bless.